Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss a topic that was requested by a few people, which is where's the best place to structure a company for e-commerce and drop shippers. Okay, so I want to emphasize that all of these situations are, individually dependent. It depends on where you're selling to. It depends on where your products are coming from. It depends on where you have your staff. It depends on the currencies that you're selling in. It depends what you need for payment processing. It depends on the industry that you're in, et cetera, et cetera, et cetera. So there is no one size fits all. This being said, I'm going to try and generalize for kind of e-commerce drop shipping. I would generally say that people who are selling digital products are kind of similar to e-commerce, so it kind of fits into a similar basket. This being said, everyone has their uniqueness to their business. So we're going to dive into that today. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell. Really appreciate your subscriptions, appreciate your support. And if you would like assistance with setting up your company internationally, figuring out what the best solution is for you, relocating internationally, figuring out how that you need to navigate that, getting a second citizenship, getting a residency, etc., please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or send us a message to our websites, offshorecitizen.net and offshorecapitalist.com. Okay. What I'm going to give here is some generalities. It is an evolving game, but I'm going to try and give you a mental framework for thinking about it that might be helpful, okay? The first thing to think about, I think, is the subject of payments, okay? What's maybe unique about these types of businesses versus some others is you're typically going to accept payment via credit card, and therefore you need to have payment processing. This has historically ruled out a bunch of the places that you would maybe normally otherwise consider. So for example, I wouldn't typically base an e-commerce company in Labuan. I wouldn't base an e-commerce company in Georgia. I wouldn't base an e-commerce company in Montenegro or Panama or British Virgin Islands or Belize or really any of these offshore tax places. For the most part, the two places that I'm going to immediately be looking at is the US and some places in Europe, okay? So those are our starting point, and specifically kind of EEA countries, okay? Not necessarily EU, but EEA. I may consider Hong Kong in certain cases. We used to love Gibraltar as a contrast to Hong Kong, and I think Gibraltar was much more attractive. However, banking got quite difficult for Gibraltar, so we don't generally use Gibraltar so much anymore. And I'll do a video in the future on Gibraltar because I have had a few requests for it. I may also consider doing UAE. However, I'll talk about that one specifically. So first of all, we look at these. Now why do we look at these? Well, you want low payment processing rates. That's your number, that's one thing. And I want to emphasize how important this is because some people are fixating on tax. And the reality is that when we're even financially speaking, like when we do detailed plans for people, the objective is not to pay the lowest amount of tax possible. The objective is to keep as much of your money as possible. And that can include asset protection considerations, that can include payment processing rates, that can include the cost of operating, such as having staff and offices and all that kind of thing. So all of this matters, right? When you look at places outside of these two environments, usually the payment processing rates are either higher or the taxes are higher. So for instance, Australia actually has reasonable rates for payment processing, but the taxes in Australia are terrible, so why would you ever go there? Really it's only for people who are foreign locals to use those services. So I'm looking for places that I can simultaneously get fairly low tax as well as get fairly low payment processing rates, okay? Now, if I was to contrast, the EU, or the EEA rather, has the lowest rates in the world simply because of the fact that Visa and MasterCard got sued a whole bunch by the EU, and it drove their interchange rates down. So for those of you who aren't familiar, I've done some videos on payment processing in the past, but the way that it works is you have a base rate, which is called the interchange rate, which is basically what Visa and MasterCard charge, and then you get other rates on top of that for the various different parties involved. And this you'll notice, for example, if you look at just Stripe's rates in Europe versus Stripe's rates in the US, the base rate is like 2.9% in the US, might be like 1.9% in Europe, sometimes lower. So you're saving 1%, and that's 1% of revenue, right? This is the thing I want to emphasize. Imagine you're in an e-commerce business, and say your net margins are 20%, right? Well, 1% is actually 5% of profit, right? Which you don't think about that so much, but you're like, well, hang on, that's actually fairly significant, right? That's kind of like adding 5% tax to your business if you're paying that extra money. So that's the first thing. The next thing I'm going to consider is currencies, okay? And this is one of the big reasons why, in general, at least when you're starting out, UAE is not a good option, okay? So UAE, you'll tend to, let's say you set up PayPal, and they've just brought Stripe there, so that's cool. You set up PayPal, you're going to probably pay 4-point-something% for processing fees. This is pretty high, right? Now, on top of that, they're going to have you settle into dirhams. So let's say that you're spending on, Facebook ad spend or something like that in order to drive traffic, and you're spending through an account that is in US dollars. It's a card in US dollars. So you collect money in US dollars, say from your customers. You settle to dirhams, so you have a conversion rate, and PayPal rips you off. They're terrible, right? Then you have to convert back in order to spend. So you have 2 conversion rates plus a higher rate there. This is terrible, right? This is a huge share of your margin that's going to payment processing, which makes it hard to justify UAE, which makes you ask, well, why would I do UAE? I'll explain in a while why it is that UAE in some cases might be interesting for you, okay? Hong Kong has some similarities. Often, not always, you will settle into Hong Kong dollars. So if you have PayPal, for example, you'll generally not you'll process in whatever currency you want, but you'll settle to a Hong Kong dollar bank account, which incurs these fees. Therefore, if I was wanting to sell in US dollars, my bias is going to be towards the US because I'm getting US dollar settlement. If I'm wanting to sell in, say, euros, then I'm going to have my bias being a European company because I'm generally going to settle into euros. Now, depending on the payment processor that I'm using, that could vary because sometimes you have like-for-like settlement and things like this, right? It's pretty popular amongst drop shippers, amongst e-commerce people, etc., to use Stripe and PayPal. This being said, that certainly doesn't need to be the case because Shopify is so popular and Shopify Payments is essentially Stripe as a back end. That limits you quite a bit in terms of what gateway options you have. So for those who aren't familiar, really quickly, you would have basically what is a shopping cart. So Shopify would basically have shopping cart software. Then there's a gateway, which is basically the secure module which transfers credit card information from the website to the acquiring bank, okay? And so the acquiring bank is basically like the merchant processor, although there's sometimes an added layer or multiple layers in between there. So basically you need a shopping cart which integrates with a gateway and a gateway which integrates with a bank, an acquiring bank. And that flow has to work properly. And if you're in the case of something like Shopify, Shopify has very few supported gateways. It's fairly restrictive in that regard versus if you're using something like WooCommerce, then there's a plethora of gateways available. And so then you might have a lot more merchants you can go and utilize, and that might make more sense. Most of them have APIs, so you can custom build something if you needed to, but who wants to spend all the time and put $6,000 into hiring developers to build an API to integrate a particular payment gateway, which probably isn't that good anyway, in with your website. So that's just something to consider, okay? So being aware of how that works. So with that in mind, let's say that we're talking about Europe. Where would I typically go in Europe? I would say that I'm going to default. This is not necessarily the case. There are some exceptions to this, but the default places that I would be looking would be Cyprus, because I can get a zero tax country or company. Estonia, again, kind of this weird, pretty smart structure. Maybe UK. If I can a UK LLP, that's going to depend on where I'm resident and how that's going to flow, or whether I'm going to put a holding company in the middle and things like this. But those would kind of be my 3 default places. Not necessarily going to use there. I could use Bulgaria, I could use Hungary, I could use a bunch of other places, but those 3 usually would stand out as the top choices, okay? So something to consider. The US, obviously there's some pros and cons there in terms of how US LLC works, and depending on, do you actually have employees, and so you have to kind of play this around depending on what it is you're looking at. Hong Kong, if you have a payment processor that can do like-for-like settlement, then Hong Kong could be perfectly reasonable, although There's kind of been some distancing from Hong Kong due to the political situation and kind of questions about the banking because of that. And banking has just been difficult. So that's another point to look at. UAE, so why would I look at UAE? UAE is a very interesting place because short term, it's painful, right? Painful. It's going to be super expensive for your processing. But on the flip side, over time, when you get volume, you can negotiate better rates. And as a result, I've seen, for example, a client got 2.2% on foreign transactions through PayPal, outrageously cheap, right? And also the ability to have settlement in basically wire transfer to a currency account of their choice, which is fantastic, right? So this is, you get this because in UAE, the market is relatively small. It's a small region, and you can be a big merchant relatively easily. One of my clients, I forget what he said, if you're in the top 3% or something of merchants, they give you special treatment. And to do that in Hong Kong is tougher. To do it in UAE is pretty easy. To do it in the US is super hard, right? And getting that special treatment could be worth it. So what would I maybe consider? I would maybe consider saying, okay, I'm going to pay the price for a year while I have my volume building up and showing that history so that I can then negotiate something really amazing down the road. The thing to be aware of with the US that's potentially problematic is if you don't have a social security number and your Stripe and PayPal accounts get shut down, you're not going to have a lot of options. Most payment processors will only open for you if you have a social security number. It's totally stupid. It's a ridiculous notion, but that's the way that they operate. And therefore, having backups is a little bit tougher in that environment than in some others. So anyway, I hope that helps. It gives like a basic framework for thinking about this. I'm thinking about currencies. I'm thinking about payment processing rates. I'm thinking about, what can we integrate with your shopping cart in terms of gateways. I'm thinking about where your customers. I'm thinking about, the long-term versus the short-term, negotiating rates, like-for-like settlement. What currency you're spending in versus what you're charging in. We could also get into VAT, which we haven't really talked about here. That's another kind of factor. Anyway, there's a bunch of different things, but that should give a basic overview. So I hope that helps, and I'm going to look forward to seeing you guys. Well, actually, if you have any comments, first of all, put them in the comments below. If you have any questions, etc., reach out to me if you have something specific, and I'm going to look forward to seeing you guys on the next video.